in their eyes. We'll go ahead and get started. We're going to have more people, but that's okay. Hopefully the guys and girls can access the live version and maybe get something there. All right, so we did go over the same topic yesterday. 5 p.m. Eastern, we went over volume. I'd go over some more of my points that I wanted to in on and a few more. So this one will have a little bit more, probably a little bit more info than yesterday. And you know, we can always go over these again if we decide to. I'm going to try and get through what I think are the most important topics first, and then just, you know, at that point maybe we start getting some suggestions, maybe some things that I'm not thinking about that the rest of the group might think is important to go over. Guys can come up with certain topics. Hey, let's talk about, you know, fill in the blank, entries or exits or candle patterns or whatever that may be. And we can certainly do that. I want to get started with just a couple of things about volume. So, you know, a lot of people don't realize that volume, now this is just talking about day trading. We're not necessarily talking about swing trading and long-term holds and things like that. But for us as day traders, volume, in my opinion, is the number one single most important aspect of day trading. Because if your volume's not there, you're not going to have any price action. And we'll go over that here shortly. Examples. So, you know, as traders, we're looking to reduce our risk on trades and take higher probability trades, right? And volume can help determine that. When you're looking at patterns on the chart, candlesticks, and I used to do the same thing. I used to focus on candlesticks too much. You know, I was looking at those and, you know, not a lot of other indications of, you know, whether I should or shouldn't take a particular trade. And just, you know, common mistakes that we all make when we're starting out. Volume, you know, it's going to give our price movement. Typically, if a volume is, you know, if a stock's trading with low volume, I typically stay away from it. Unless it is something like, what was it, Lizzie yesterday. Whenever I took that trade, it didn't really have much volume, but I was safe in the trade, number one, because it had a catalyst with the word Apple in it, of course. And number two, we were still kind of in that trading area of where we had closed at the previous day. So I felt like it was a pretty safe trade. And trades like that have a catalyst, yeah, I might hop in with no volume. And BBW would have been a perfect example. It had really good earnings the other day, and it was a trade that I alerted in the channel to, hey, let's keep an eye on this one. And we all forgot to keep an eye on it. And it didn't have any volume at the time, which is the reason that I didn't hop in. Well, it ended up being a mistake because I think when I alerted it, it was like in the high 10s or something, and I believe it ran to like $17. So we could have done really well on that one. But anyway, there are certain times where it's okay to get into a stock with lower volume. But the majority of the time, if a stock doesn't have any volume, I'm just staying away from it. You know, and I typically follow the volume. you guys have ever seen, but you'll have traders ask, hey, where's the volume? Where's the volume? That's what they're looking for, because that's what's going to give that price action. Volume is going to also provide liquidity. It's easy to hop in and hop out. And I'll show you an example of a ticker that traded yesterday where it would not have been easy to hop in and hop out due to the lack of volume. So let's get started with that real quick. Let's look at, I can show you right here, I'll show you two examples, even VTNR pre-market. Keep in mind, these times on the bottom are Central Time. So I have my Thinkorswim set up to my time. I live in Texas and we're in Central Time here. So, these are minus an hour from regular market time. So this is really 4:50 in the morning here instead of 3:50. You can see how flat the volume is here. And look at your corresponding price action, with that. There's just nothing to trade. You can't, right here, I want to show you here as well. Whenever I'm showing you these volumes, volume amounts, right there where I just put that arrow, that's where you want to look. So when I get on a candle, volume that traded on that candle, 62.55. Just look in here, look at the volume that traded on that candle, 113 shares. So let's say that you decided to hop in here and you bought, 1,000 shares, let's say, and it traded 2,200 shares here. You think you're going to be able to sell your 1,000 shares here? Maybe, maybe not. Maybe, maybe not. 800 shares there. So let me show you another example. Yesterday it was ATXI. This particular, I don't know what happened there, So this particular stock traded yesterday. Total volume for the entire day was 84,462. And you can tell by the chart. So if you open up a ticker and the chart looks like this, just stay away from it, because here's what can happen. And I'll give you, this is the same example that I gave yesterday in the session that we had, is that you're watching this ticker for whatever reason. A buddy of yours said that, this thing's going to get bought out. So you're watching it, right? So, and then you see this big green candle. Oh yeah, my buddy was right. So you hop in here, by the time you see this, candle's big, you're probably hopping in more towards the top of it, right? So let's say you bought 5,000 shares somewhere around in this area. So 514 area. And then it continues on up. So you're getting excited, right? You're going up and you're still holding your 5,000 shares. And then it pops up here. And here you see 202 shares were traded. Let me go to the next candle, 300, if you can even call that a candle, 300 shares traded here. Then it pops up here to 518. And, obviously we're not talking about much profit, 514 or whatever it was to 518, but just as an example, 100 shares were traded on this candle. Now you're holding 5,000 shares, okay? So let's say that you realize at this point maybe you made a mistake. So you go to sell your 5,000 shares. Well, there's only 100 shares traded on that candle. So maybe there was, that was you selling the 100 shares to whoever was willing to buy those 100 shares. Actually, it would have been. So now, let's say you're stuck with 4,900 shares. So now you're popped down here because you sold some, the price went down. So now you've got 300 shares traded, so you can sell another 150 shares. So I think you kind of see where I'm going. You can get, basically with no volume, you can get stuck in a trade where you just can't get out because there's no volume, there's no action, nobody's buying and selling either, really, any of these shares. So don't get stuck in a trade because of lack of volume. On any given day, there are plenty of stocks that are moving with volume that you don't have to mess with these kind of what I call them. They're just, it doesn't mean it's a bad stock. It just didn't do anything on this day. So just stay away from those. Follow the volume. That's where your price action is going to be, and that's where you're going to be able to make better trades, easier trades, and make more money. Again, when I'm going over volume, this is where, right where this arrow is pointing is where, I don't know if that's going to stay. Yeah, it doesn't. That's where you want to see what the volume is for a particular candle or volume bar. So I'm going to remove that. About, not trading in this area. So here's a couple things that I want to show you. So whenever you're looking at the chart, the way I like to think of it is, and this may or may not be exactly on the, but in my opinion, the candlesticks tell half the story and the volume tells the other half of the story as to what's going on here. There's a lot of people that trade just off of volume, price action, and maybe they have a volume profile over here. And I'll show you what that looks like here in a few. But don't use any indicators other than just volume and price action. Trade with it just fine. That's how important it is, because they're not using VWAP or EMAs or all these fancy oscillators and squeeze, all this weird stuff that everybody has on there, so that you end up not even being able to see what's going on in your chart because you have so many indicators. So that's how important it is that people actually trade with just those two indicators. Let me show you what happened here. So, we have this flat volume that we talked about, right? Nothing's going on down here. So let's look at what takes place here and why this trade starts looking good here. Now, obviously, we know the future. I can move this over so we don't know the future so much here. But I want to show this to you because it's important. So right here on this particular candle, we have 100 shares traded, right? Still nothing. We have 110 shares traded here. Then we have 1,300 shares here. And then we have 496 here. But look what happens on this next candle. Not taking into account solely the fact that it's a big green candle, but look at the volume. So we just went from 100, 400, 1,300, whatever. Then we jumped to 32,000. Okay. So volume is basically the energy of a stock. So a huge burst of energy just came into this stock. So that's what we want to look for. Let's look at this next volume bar. Next volume bar basically doubled. Now we're at 60,000 on this one. This one here, 86,000. So this is huge energy coming into this stock. This is what you want to look for. You're not necessarily looking for, a certain amount of volume, for every particular stock. What you're looking for is relative volume compared to what it's been doing recently. Okay, so recently this thing's been trading, as you see here, with not much, right? So this volume relative to this volume is enormous. That's what we're looking for. We're not just looking for candlesticks and their patterns. We're also looking at the corresponding volume, as you can see here. And I changed this. I normally have a different indicator here, that one that I actually paid for. I like it because it shows, like, instead of just showing this as a solid green candle, because there were probably some sellers in here somewhere, likely. It's going to show me how much of that candle was selling. So maybe this part down here would be red, but not everybody has that. So I wanted to just show a volume subgraph that everybody has access to. And this actually is a volume average subgraph. So that's what this line is. So that average, that's what the average is for the day so far. So as it's going up, it's pulling up that average. But keep in mind, this is a lagging indicator. It's looking back in time, and it needs time to catch up. So that's not already up here. So anyway, that's why I changed. I just want to let you know that's why I changed the volume subgraph there. So let's go over a couple of more things, and we're going to dive a little bit deeper into some patterns and volume, and exactly what we're looking for. So let's take a look at this one right here. Very interesting candle here with a lot of volume. Okay, so it ended up being a green volume bar. bar, but likely it was, pretty close to half sell as well. I'd have to check my other one to make sure, but that would be my guess. So what that tells us here, most volume so far, right, that we've had for the day, 86,000 volume on this. This is a 1 minute chart. So those 86,000 shares bought and sold in this 1 minute time frame here. What this tells me is we had a whole lot of volume and price tried to get pushed up. And so what happened here? So if price continued to push up and we didn't have any selling pressure, this candle should have been a larger green candle than this one, right? Because the volume traded was larger than the volume traded here. So had we not had any selling pressure here, this volume candle may have gone all the way up here and closed there. But because we had more shares traded here, I don't care what color this candle ended up being or what color this volume bar ended up being, it lets me know already that we had a lot of selling pressure because the price only went, so the price closed here, right? And then it only went to here with that much of a volume bar. That's huge volume for the price to only move from $4.41. Well, it closed here basically, so it closed at 442. So basically, you had a penny move on this particular jump here with that much volume. Very telling of what's going on. I'm actually surprised here when this price got pushed all the way back down here. I'm very surprised that we had another green candle on the next one. I would have expected at least some kind of pullback here. What you're looking at, instead of just looking at this candle and saying, oh, well, the price tried to go up here and didn't make it, you want to look at that corresponding volume to see how strong that sentiment was. If this volume bar were like this size, then that would tell you, well, okay, selling wasn't quite as strong, okay? And that's what we're looking for as well. You want to compare your buying volume bars to your selling volume bars. So what does this tell us right here? In these 1, 2, 3, 4, in this 5 minute time frame here, the size of these volume bars, and let's just assume that since they're all green, that they're all majority buys, right? So whenever we have, let's say this is a pullback here, whenever we have a pullback, what does that tell us? Well, that tells us, since this volume bar is not as big as the majority of the other ones here, that tells us that right now there's less sellers than there are buyers. I think in the short term, that would indicate to me and should indicate to you that we're probably going to be moving in an uptrend here. We have less sellers. Here's another good example, less sellers here. Buyers coming back in, we have some sellers, more sellers here than we did have buyers here, but to the recent history, where that line is, we don't have a lot of sellers yet, okay? So we're still looking good. So this is how you can look at volume to give you an idea as to where we expect, it's not always, I said yesterday, there's never an always and never a never in the stock market. But this is where we can expect for price to continue on an uptrend, and in this case, it certainly did. All of these different indications, whether it be candlesticks and patterns and volume and your VWAP and previous support or whatever else, these are all just indications of where a stock should go based on those indications. So the more indications that you can have that are agreeing, they're saying the same thing, then you should have a safer trade. You should have a trade that should be, in your favor. Less risk. And this is why we're looking at different indicators. And a lot of people don't realize how important volume is and the story that it tells, which is why I wanted to hold this as the very, very first class or very first session, trying to get away from that classwork. A couple of things I kind of took on runway before I fueled up here. If if your microphone, we've had a few times where we had quite a bit of background noise and they didn't realize it and it kind of went on for a few minutes. Go ahead and just mute your microphone just in case. And then if you do need to ask a question, and you can even ask a question with your voice, but just keep your microphone muted until you're ready to ask that question. But if you're not comfortable asking a question using voice, that's totally cool. Just above the channel that we're in now is a channel called Questions During a Live Session. You can actually just type your question in there and I will address it and hopefully not miss any. If you do me one favor though, if you have a question directed at me, you want me to answer it during this live session, if you just at Doc so that it shows up in that gold color, and then I know it's a question directed at me, because sometimes there's some chatter, going back and forth, which is fine. That way I don't miss any questions. I certainly don't. That's one of the great things about attending the live version is you can ask these questions, if something's unclear or you need clarification on something or whatever. So another thing that I want to go over is volume dictates what price what chart time frame that I'm looking at. A lot of people ask me, I've been asked a million times probably, hey Doc, what chart time frame do you look at? Are you looking at a 1 minute or a 5 minute? What are you looking at? Well, volume dictates that. And I'll show you an example as to why. There's a move here we had around this one right here. Started at 1 o'clock, keeping in mind that's 2 o'clock market time. So my time, 1 o'clock, and finished about like 1:39 here, right? So we're going to mark this move so that you know it's the same move. Okay, so very nice move. This is again on a 1 minute chart. So kind of just take a mental picture in your mind as to what this move looks like. How many green, you're more focusing on how many green and red candles there are. And the reason that I would not have been trading this on a 1 minute chart is because of the volume. So whenever you have a stock, let's say it's trading at 20,000, 30,000, 50,000-ish shares per 1 minute candle, that's okay. You're fine staying on that 1 minute chart. One like this that's trading here, 42,000 shares, 134. You start getting into those big numbers, you need to go to a higher time frame, and I'll show you why. So there's so much volume going on that this price action is not going to make as much sense on a 1 minute chart that it is on a 5 minute chart. This trade looks on this minute chart. I have one pullback instead of, I don't remember how many orange candles we had on this move right on this leg here, but it was a lot more than one. So volume, most people don't know this. Based on volume, that's going to dictate your time frame that you should be looking at on your chart. So it's much safer. Obviously, during the trade, yes, the candles are going to be moving up and down, up and down, up and down. But when the candle closes, you're still looking good. You're not having any lower lows here. You're having higher highs. So you got a high here, higher high here, higher high here. So it's still looking great. Here's where you might start getting nervous. Basically, this is an indecision candle. You want to take and look at your corresponding volume with that, compare it to your previous volume to kind of give you the rest of the story. So indecision candle, especially when it has a lot of volume, or really even if it has low volume too. That basically just says, the market's not sure where we're going to go next. We had a small body here. We tried to go way up here. Sellers came in, pushed the price down. We tried to go down here. Buyers came in and pushed the price up. So here I would have been watching closer than normal. Basically what I mean by that is I'm not switching around checking other tickers at this time when I see a candle like this. I'll stay here and watch the trade if I were in it. So what we had here was this candle came down here. I would have started to get nervous, a little bit, looking for a reversal, because a lot of times after a small body candle or a doji, that can indicate, not always, a reversal possibly incoming. So that's what I would have been thinking when this candle formed. But what I like about this one is that buyers came in at this level here and pushed it back up. 1 second, guys. That was Docs who brought me some fresh juice. Okay, so I like this candle because when it tried to come to this low point here, buyers came in, pushed the price back up, and then we had a nice move to the up direction. So just recognize those things and correspond the volume with it. Another thing that I like about this particular candle is look at the corresponding volume, right? What does it tell us? Well, that tells us that there wasn't a ton of selling pressure here. Yeah, there were some sells, but it wasn't high. If this candle were up here or up here, I keep saying candle, these are volume bars. If it were up here, I would have been a little more nervous. Because, again, you're comparing your sells to your buys, right? So we still have all of this buying going on, and the sell volume bar relative to the buying volume bars is pretty low. So that tells us right now we have more buyers than sellers. So what can we expect? Well, we can expect and hope for that the trend still continues up. And here shortly, I'm going to draw some trend lines on some of these moves to show you guys how to identify those as well. Okay, so let's hop to the next thing. So one more thing that I forgot to mention on volume is when you have a lack of volume, it creates a bigger spread. For those that don't know what a spread is just the difference between the bid and the ask prices. So when you don't have a lot of volume, there's not a lot of traders there. You may have, a handful of people that are wanting to, sell their shares at 575, and a handful of people that are wanting to buy shares at 525. Have a 50 cent spread. So basically, when you have low volume, you're buying. If you want to buy right now, you're going to have to buy where it's being sold at, right? So you're going to buy at 575, and if first willing buyer is at 525, you start out 50 cents in the hole. So whenever you have a lot more activity going on in a stock, that spread is going to, down to where it should be, which is typically, sometimes in the 1 penny. Keep that in mind as well. So let's go over wicks a little bit here with corresponding volume. One that I wanted to look at in particular. Wick is very important. A lot of people kind of just ignore the wicks and they just focus on the body of the candle. So obviously on this red candle here, the price opened here at the top of the body, right? And it closed down here at the bottom of the body. So whenever this candle started, right here at this level, when it finished here at this level. So at the beginning of this next candle, that's where your price was, right? What these wicks tell you is, well, at one point, it didn't open or close there, but at one point during this 1 minute candle, it was here, right? And at one point during this 1 minute candle, the price was also as low as here. So these are very indicative of what's going on, especially when you're looking at this corresponding volume. So if you look at that volume bar, it's bigger than any other volume bar on this entire time frame here from 1:15 to 3 o'clock. So this was the big one. So you would expect that the candle wouldn't look like this with such a huge volume bar, right? The candle to look like this, or even bigger, because if you look at the corresponding volume on that candle, it should be humongous, because this is a much bigger difference of open here and close here versus the smaller body on this one, right? So what that tells us is, once again, when you have these smaller bodies, we just talked about this just a minute ago. What can that tell you? That can tell you that, well, be careful. There's a little bit of market indecision here, so there could be a reversal incoming. Okay. And right here, we were kind of trading sideways. So really, this market indecision could have been either way. It could have been, we have a reversal coming off of this sideways short-term trend to an uptrend. But in this case, it was a downtrend. So I don't know how this candle formed, or whether we, once we opened here, whether we tried to go up first and then got pushed back down. That's important. You kind of want to know that information, if it started here first and then ended up, kind of pushing back down here and bouncing up. So I don't know that. I don't remember. But wicks are very important, because it lets you know where sellers are coming in, right? So obviously buyers pushed this up to here, and then sellers came in at this level, 818, price down. So for whatever reason, they liked selling at $8.18 or somewhere around there. It also tells us that we had some buying support here. But I like the fact that this is a good example, because it's such a huge volume bar. There were so many shares traded in this basically kind of an indecision candle. Nobody really knows at this point where it's going to go. So these are things just to keep an eye out for, to start looking for some type of something getting off of this trend. So we had a very short-term trend here, kind of sideways trend. And then we don't know if we're going to break through that trend up, or if we're going to break through that trend down. Maybe this should have been here. Didn't mean to do that. We were. Hey guys, we don't know, at this point, where that was going to go. So let's move that, and let's draw this a little better. So, once we kind of entered this sideways trend, we're popping down here, back up here, coming down here. We did bust it a little bit here, but when you have a wick that breaks the trend a little bit, I don't pay as much of attention to it as I do when the body really breaks that trend. So finally, when this trend did break, you see it kind of held support here with the body. And when it finally broke, we had a huge crash. And why did that happen? A lot of people say, hey, why do these big knives form? A few reasons for that. Not that this is a really large knife or anything, but it was obviously a pretty good push through this short-term trend support. The reason for that is because you have traders, they call themselves breakout traders. So they're drawing these trend lines, watching for a breakout, and they're watching for a breakout in either direction. Maybe they're going long here on a breakout here, and maybe some of them got burned when this candle was up here. That's why we always wait for confirmation. We don't just hop in on the very first break. So you have these breakout traders that probably entered a short position, somewhere here, or maybe they waited until confirmation here. Usually when you get this far down, whether it closes there or not, it's a pretty good indication that it's broken that current trend. This is one of the reasons you see that. And also, once that starts happening, then you get a snowball effect where other traders come in and, they're panic selling. Oh man, this thing's getting ready to knife. So, they're selling, shorts are entering. But always look at this corresponding volume here. So we had here 1.2 million shares traded on that candle. And normally I would say, man, that's a ton of volume, right? Well, relative to some of this, it's, not really that big, but we want to look at relative to very recent history on what's been going on here. You don't know who all still at their computer still trading this thing versus 20 minutes ago, right? So relative to recently, that's a pretty big, pretty candle bar, or a pretty volume bar. So what that tells me is that there was very strong sentiment in this down direction. They were really wanting to push this price down because the volume was there. If it looked like this, which it can, you can have a larger move like this with a smaller volume bar. That would not have concerned me as much because it just shows that there wasn't that much pressure on moving that price down. So make sure and always don't just look at the candles, look at the corresponding volume bar. That will tell you the rest of what's going on there. Remove this. Take a look at, so let's draw. Let's see here. Okay, a couple things I want to show you guys here is when I'm looking at a ticker, it starts to get volume, right? And I'm looking at, let's see where the high of, I think it was 666. Yeah. So 666. Let's draw a trend line there. It's extended all the way to the right. So the reason that I'm drawing that there is I want to know what the pre-market high is of that. Now, this isn't really related necessarily to volume, but I just want to point this out because I think it's important. I want to know what the pre-market high was. And why do I want to know that? Because during pre-market, you can have shorts entering this particular stock. Just like we're trading these uptrends, you have shorts looking for the top to try and short, going back down because what goes up must come down, right? So I mark those pre-market highs, 666 in this case, I believe, yeah. And there it is, and it stretches all the way across my screen. And the reason that I do that is I want to know when it breaks that. It didn't really do much here, but once it breaks that pre-market high, no short that during pre-market that's in the green still. They're all red because that was the highest price that they could short, and now it's over that price, so they're in the red. And you can possibly at that point start looking for shorts to cover. And when that happens, what does that do? Well, of course, it helps our price move on up because it makes them, by covering, they have to buy those shares back. So they're buying shares just like we are. So I'll mark that. I'll also mark these bounces. Let's find a good bounce with some volume here. And there. So here's one. This is a pretty good move here. So, we made this that same move at 1 o'clock, and we came back and we bounced off. Let's say that was 745, right? Why I mark these, extend it all the way to the right so that it predicts the future, possibly. So let's see what that did. So 745, we have that marked on, or right around there. 745. Yeah, 745. Okay, so the reason that I'm looking for that is keep in mind, whenever we have a reversal, right, or a bounce, however you want to call it, then that is the level that buyers came in. Buyers came in here to push this price back up. So you had buyers at 745. Well, if buyers bought at 745 here, maybe buyers will buy at 745 here also. And guess what? They sure did, right? Buyers bought at 745 there, maybe they'll buy at 745 here. And they sure did. Same here. And it just continues on down the line. I mean, this is even after market. You still had buyers coming in at that 745-ish level. I'll draw those bounces, and I'll draw more than one. On each significant reversal or bounce, I'll draw a trend line there. Does it always hold? Well, of course not. As you see right here, it broke through, but it gives you at least an area to kind of focus, to be watching for it. Otherwise, we don't have any idea where it's gonna bounce, right? So not only these bounce lines, but you also can draw. And I've cleaned up this chart so that we can look at it, and there's not a million lines on there. But I'll also have previous support that I drew on the daily chart. A lot of my support that I draw is going to be on the daily. Out here, I'll be drawing support lines, and I might zoom in there to see. Obviously this is old, kind of older support. Just I think a few days ago this thing was trading in the dollars, so this one's not a good example. But if you have a stock didn't go from $1 something to 8 something, then be a better example where you can draw some support here. Keep in mind that the longer time frame chart that you're looking at, the stronger the indicators are going to be, like support and resistance. So we obviously know that whenever this started running, very old resistance here at like whatever that is, 312, 314, 315, somewhere around there. That was going to be one of those points where you would want to watch to see if it broke through that resistance, because it met that resistance. Keep in mind, this is a daily chart, so each one of these candles represents an entire day. So that would have been resistance, that would have been resistance, that would have been resistance there. So you can draw, these different ones on the daily chart, and then when you pull up your 5-minute chart, they're there. You may not see them yet because maybe that, you're not in that price range, but once you do get to that price range, you can look at it and see, oh, hey, that's old resistance. And how do you tell the difference between what's support and what's resistance? Well, if you have one of those lines drawn, if you're below it, it's resistance. If you're above it, it's support, right? So that's what I'll do as well. And I try and do it pretty quickly. Once I identify some tickers that I'm going to be trading for the day, whether it be in pre-market or whatever, I'll do this real fast. I'll go in here and draw some support and resistance, and that way I know where they're at. So I'll have my term bounces on here as well. This being on the 1-minute chart, support and resistance isn't as strong, but at least it lets me know where these buyers came in and pushed this price back up. It also lets me know where sellers came in and pushed the price down, like right here or right here, right? And even when you don't have any, let's say you're in an area where you're kind of in no man's land, you don't have any support or resistance drawn there. You just don't know, right? Well, at that point, you can dial into your price increments. 25-cent increment has a little bit of resistance. 50-cent has a little bit more resistance. Dollar increments have much more resistance. That's why a lot of times you'll see on the channel when we're trading a stock, it's at $3.90. I'll tell everybody, hey, be careful at $4, because that $4 mark is going to have some resistance. You might have, and resistance is just where you expect to see sellers coming in, where you expect to see that selling pressure happening. And what do these guys do? Well, for whatever reason, I don't know what it is, but they like to sell at these even numbers. Hey, I entered this thing at $3.24, and I'm going to sell it at $3. I don't know why they do that, but when they do, since they do that, I typically, if I'm looking to sell, if I don't think it's going to break 3 for whatever reason, I'll usually put my sell order at $2.98 or $2.99 or whatever. If I'm not going to be watching it, if I'm watching it, then I'll just sell manually. So those are some things to look for there. Let me see, just going over my notes here to make sure I don't miss anything. So whenever you're having give an example of a wick that doesn't have a top. Here's one here. Okay, so what does this candle tell us? Because it doesn't have a wick at the top, what does that tell us? So it tells us a couple of different things. Number one, it tells us that while this was happening, when we got up here, because we opened here, right, and we closed here, Well, we didn't have a wick here, so we didn't have any selling pressure there. Unlike this candle here, whenever we got up to this price here, we had selling pressure, and it brought it back down here. No selling pressure here, so that's the first thing that it tells us. The second thing that it tells us is that the buyers, basically, they just ran out of time. Had this candle lasted longer, it would have continued on up, right? Because we didn't have any selling pressure yet. How much it would continue, because there's nothing indicating that, but we do know that it would have continued on up, but the buyers ran out of that of time. The 1 minute was up, and it was time to create a new candle. So whenever I see these with no wick on the top, I'm expecting for the next candle to be an up candle, right? So in this case, it certainly did. So I'm going to give you an example of kind of a fake out one here, because the opposite is true for a bearish candle. So on the bottom, and what does that tell us? Well, that tells us that there was no buying pressure there. Buyers didn't come in and say, hey, this is somewhere that I want to buy some of these shares. So I would have expected that this next candle for it to have been a bearish candle as well. But that's why I said that it doesn't work 100% of the time, but it can give you an indication of what to expect. Something else that I would have liked about this particular candle is look at the corresponding volume on the bottom. It's that little bitty selling candle here. So this was the first candle after the market closed. So, it's kind of hard to tell because you don't really have anything to compare it to, because, not as many people are trading after hours that are trading during market hours. But I would have liked the fact that this a relatively small volume candle. So that would tell me that maybe there wasn't that much, even though it went down and there was no wick at the bottom, the sentiment wasn't that strong. Because if you look at the next few candles, the sentiment going up is much stronger, right? Much stronger. And not only do we see that in the volume, the volume bars in comparison to that sell bar there, we also see it in the candles. So corresponding volume, very, very important. It tells a lot more of the story. Making sure we're catching everything here. I'm just checking my notes, guys. Bear with me a moment. You see a lot of people say that volume precedes price, right? And that's 100% true, but that's not always the case that the price is going to go up. Sometimes volume precedes the price going down. Obviously in this example here, once it was down here, let's say that this candle wasn't finished and the body was still way down here, that's a pretty good example of that. So a lot of times I'll get a volume alert on my unusual volume scanner, and I'll take a look at it, and it's just it just had a big knife. So volume alerts are not always going to go in the direction that you are always going up. Most people think that when someone says volume precedes price, that means it's going up. That's not always the case. So I wanted to point that out. So another thing that I wanted to point out too is let's kind of look at a cool off period. VTNR and LEDS were both good examples of that yesterday. Is running on news, but it's kind of older news. These guys bought a refinery, and now it costs so much money. Now they don't have a lot of money, and there's a imminent. Since it's kind of older, it's not necessarily still running on that news. Maybe it is a little bit, but I think it's kind of more being pumped at this point because it's a low float. So when you're looking at cool off periods, look at the volume. The volume will tell you that it's cooling off. And that's why a lot of times you'll see someone ask me, hey, take a look at such and such chart. What do you think? And when the volume is low relative to what it's been recently, I'll usually say, well, the volume's tapering, or, It looks like it's kind of out of play right now, but that's what you're looking for. You're looking for that volume to come back. And it happened so many times on VTNR yesterday where, the volume just poofed. And then, 10 minutes later, you get like this huge volume spike and, the show's back on, right? So, and sometimes we'll miss these trades. And that's why oftentimes whenever I haven't been doing it lately because I've been really, really busy with Discord, this new Discord thing and answering lots of direct messages, which is fine. That's fine. I have the option of, answering them later if I wanted to, but it has caused me to miss some of these moves. And I need to get back to, well, I have this set up, but I'll show you what it looks like. So, I'll go back to this where I can be watching 4 stocks, and you can even watch 6 if you want. It's kind of overkill a little bit. But you can watch a lot of different stocks at the same time. I need to get back to doing that because I am missing some entries because I'm not watching these like I was before. I'm too involved in wanting to provide you guys with information and trades to hop into. And actually, I think it's having an adverse effect by doing that. If I kind of go back to what I was doing before, I think I would have more to look at because, that's one of the things. Like BBW was a perfect example. All of us knew about it, or whoever was online at the time when I alerted it. But I know that even one person hopped into it because by the time it started getting volume and took off, none of us were watching it. So maybe come up with some kind of plan where the stocks that are alerted, that are worth watching, we all take, 2 or 3 of them and, we're kind of designated to just keep an eye. And then once something starts popping on it, they can say, hey, such and such is getting volume. Anyway, it's kind of off topic a little bit there, but my point is that, just because this volume dies off, a lot of times, volume will die off on a stock. And it never recovers. It just, it's done for the day, and it just, continues on down. But that's the case for some of these stocks like VTNR, LEDS. They both had basically multiple runs, so they would have this cooling off period. And what's your indicator for that cooling off period? Well, it's volume. 100%. So you just, watch for, that's why I always say, watch for volume to come back. Well, what happened here? 1 o'clock. So this thing ran earlier, right? It ran a pre-market. Nice run here. I'll go over a little bit of this market open stuff here in just a minute. It was, pretty cool. A little bit of runs here and there, not a ton. You're talking about 30, 40 cents or whatever. But look at when the volume came back. When the volume came back, man, that's when it really, really took off. So this is why volume is so important and why you want to pay attention to it. Let's talk about the bell real quick, and I'll tell you why I don't like holding through the bell, and I really don't like buying at the bell either. And VTNR is a perfect example of this. So look what happened at the bell. So it just totally sold off, right? Pretty big, ugly volume bar here, almost 2 million shares, selling off on this first one. And then it gets way down here. So people are thinking, oh man, VTR is going to, it's going to sell off and tank. Psych. Nope. Right back up, right? So the volatility here is just crazy. And it's really difficult to take a long position somewhere here with any kind of indication on what the heck is going on, right? All of these huge wicks, very, very volatile stuff. So I like to wait until things settle down a little bit where I can identify what kind of direction that this thing is headed in, because it's very difficult to tell a lot of times with these at market open. Now, if this thing at market open just started, it made a nice green candle here, a nice, here, or maybe it pulled back a little bit, but then had a bearish engulfing candle on its second candle, then yeah, you could maybe look at an entry there. But none of this right here makes me feel very comfortable. Finally, it kind of started, consolidating a little here. But look, these are huge swings, 637 to, 601, happening pretty fast. And then finally, we had some indecision candles here, and then boom, the market decided, buyers came in and the market decided, hey, we're going to take this up. But then shortly thereafter, it had a huge sell-off. So be real careful of the bell. Unless you're really fast in this, if you're in, let's say you bought this in pre-market and you bought it at, 583 or, whatever. If you're pretty fast and as soon as the bell rings, you can click and put your stop loss in, then, you should be fairly safe there. Careful of the bell, and this is a real good example of why. Trading this is much easier, safer. I wouldn't necessarily trade this, but trading this is much easier and safer than trading that bell trade. And don't be afraid to miss a trade, miss an opportunity. All these opportunities have different risk levels attached to them. So if that risk level is too risky for you, hey, that's cool, because guess what? Chances are, if it's not this ticker, there's going to be. Actually, I didn't have a chance yet, but got another juice brought to me, and I didn't drink the first one yet. So we eat pretty healthy, and so I get like fresh celery juice brought to me in the morning. Okay, so as far as that goes, don't be afraid of missing a particular move on a particular stock, because there's always another one, right? Don't beat yourself up on that. So let's see what else we have here. Let's go over, a lot of people learn all of these candlestick patterns, and, they look for bull flags and head and shoulders and double tops and double bottoms and, all these different indicators. And that's great. That's cool. Don't rely solely on those indicators. I used to do that. I told you I used to look at, really focus too much on candles and what was going on there without looking at any other indications of what's happening in that particular stock. These indicators or these patterns can be good, but definitely pair them up with other indications that are agreeing that this is a good one to get in. So I'm trying to find a bull engulfing here. So, okay, I'm not going to spend too much time searching. I'll just tell you what it is. So basically, so let's say that this candle here, this green candle, the body closed where the bottom of the wick is. So basically what it did is it engulfed this body of the candle, engulfed the entire previous red candle, right? So that's a bullish engulfing candle. I like those. They're one of my favorite patterns to take a look at, because it shows really strong sentiment. Okay. I also like to see when these green candles are continuing to make higher highs, right? So you've got a high here, a high here, a higher high here. Okay, a little bit of a pullback here, but look what happened on this pullback, right? We had the price try to get pushed down to this level. Buyers came in, pushed it right back up. I still consider this a very bullish candle. And then we had another really nice move there on the continuation of the buyers pushing this up. So, pay attention to bullish engulfing. Also pay attention to bearish engulfing. It's exactly the same, but just the opposite. So this is not a perfect example, but let's say if this was a little bit higher, but this particular red candle almost engulfed the entire previous green candle. When you see that, it's just a strong indication. Look at your corresponding volume as well of sentiment going in that direction. You've got a lot of sellers pushing that price down. It basically engulfed the entire, whatever happened there now kind of doesn't matter, because we're taking this over now. Makes sense there. I'll address some questions. If you want to go ahead and type in any questions, that's cool. I'll get to them. Let me kind of continue on with where I'm going here. So I covered that. Okay, so another thing I wanted to go over about the narrow-bodied candles. So let's go back to that one. Find one here. Cool. Use this one again. You know, it's not too narrow. I would like for this to be a little bit more narrow, but we use it as an example anyway. A couple of different things that this can indicate, especially when you have this big corresponding volume. When the body is small, keep in mind that a lot of traders, especially newer traders, think that retail traders were the ones moving this stock. You know, I even saw some people talk about, hey, let's get together and let's pick a low float stock and, you know, let's blow it up and take profit. That would be extremely difficult to do. If you guys think that we're the ones moving this stock, yeah, I've got some news for you. we're not. So these are, you know, market makers, you know, hedge funds, insurance companies, you know, all these other big boys. They're the ones that are moving these stocks with their buys and sells, and they're also looking for liquidity because they want to be able to hop in and hop out. They, believe it or not, you know, they're not just taking long because they're trading stuff just like we're trading. They're trading catalysts. They're, you know, trading, you know, price target stuff. You know, all the things we're looking for, they're looking for as well because you can make money on it, right? What a small body candle can tell us is a couple of things. Number one, it could be that the institutions are just kind of observing. So this would be an example if we did not have a lot of volume here. If, let's say this volume was, you know, much smaller, maybe down here somewhere. That would indicate to me that the institutions are just observing at this point. They basically want to see if they have a continuation of the current trend, okay? Because we had a large volume bar corresponding with that candle, indicate to me is that a lot of the big boys are entering to go in the opposite direction. In this case, that's exactly what happened. Basically, whenever we're trading, yeah, you know, retail traders do have some influence, but whenever we're trading these stocks, we're basically just kind of going along for the ride with where these market movers are wanting to take this stock. You know, we're basically there for the ride. That you can't have a really large chat room, and there's some that are out there that can pick a very low float stock and, you know, make it move a little bit. You know, that certainly does happen. Okay, so I wanted to point that out as well. Okay, so I wanted to point out. So let's say that we're in an uptrend, right? So let's draw this up here. In this uptrend, okay, and in volume. So this is another key area where volume is very important. So if you're in an uptrend and the volume is continuing to increase, see how it's increasing? It's going up, 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 up here. You know, I mean, it dipped a little here, but over the longer period, it's, you know, it's getting bigger than kind of where it started, right? So that lets you know that it is a strong trend. Okay, so this trend had strength where this volume is down here. Same exact thing on a pullback or a reversal. Look at the volume. If the volume is big, then that particular trend, reversal, downtrend, whatever it's doing, if volume is still strong, then that's a strong trend, right? If volume is weak, compared to basically, you know, what's been going on to the recent relative volume, you know, how relative is to the recent volume, it's low. Like if all of these red candles were down here, that would indicate to me that this pullback is weak, okay? And when those are things you want to look for, because when you have a strong uptrend and then a weak downtrend, look for a bounce, okay? And candles are not going to really tell you that. They may give you an indication of that, But really, the biggest indication of that is going to be your volume, because volume is going to tell you where the sentiment is. How many of these traders, be it market makers or retail traders, whatever, how many of them are involved in this particular move? Okay, the more involved, the stronger it's going to be. The less involved, the weaker it's going to be. That's all dictated by your volume. So never ignore that. Let's look at thing here. Oh, I already went over that. Another thing I want to point out, and this does have some to do with volume as well, just basically what we just went over as far as, looking at the volume to identify strength or weakness. But let's say that this was our uptrend, right? All of these trends, they're all short term. We don't know how long they're going to last, but not going to last forever, right? So they're all short term. So you've drawn your trend lines here, and it certainly held true, and I can show you that it held true. So let's remove this right extension, okay? And actually, let's redo it. So let's say that we don't know this part up here yet. Let's say that all we have is we're here. This is the candle we're on right now. All of this has not happened. This is the future. So we're going to draw kind of where our trend is, right there, right? I'm going to cancel this right extension. Make it long enough. Let me do it one more time. Sorry, guys. So draw it to here. Extension. So this is all the information we have, right? This is how predictable these are. And like I said, nothing's ever 100%, but it can give you a really good idea. So this is all the information we have. Now let's go ahead and, because I would do this immediately, even though I'm right here, we're on this candle. It's yesterday at 1:13 p.m. right now. And so I'm going to extend that on out and look what it did. Well, look how well it held. This held as pretty good support, right? We had a bounce here, had a bounce here, bounce here, bounce here. So a lot of times traders will, this is another thing I want to point out with corresponding volume. So a lot of traders are afraid to enter into a position, let's say on this uptrend, when the candle starts way off of the trend line, right? And that's good because it is typically a bad idea, because this trend line tells us that this could certainly pull back to here before it has a possible move back up. So what you can do to make that a little bit safer of a trade in your mind is look at the corresponding volume. So if you're thinking about, okay, this thing just pulled back, right? And buyers came in, pushed this back up to here, and you think, hey, I like that move. I like the fact that buyers came here, push this red candle back up. So let's say you're thinking about taking a position here. Well, let's look at the volume previously. So again, you've got a huge volume candle here. We're looking at the line that goes all the way down to the volume bar, right? Big volume bar there, that's buy. Big volume bar there, that's buy. Another buy. And look at the relative comparison on the pullback candle. It's better than those other bigger ones, right? More big buyer candles. We have another pullback candle, but again, sentiment wasn't as strong on the selling side as it was on the buying side. And that's indicated not in the candle. I mean, you don't see that here. This candle is just as big as that one, right? You don't see it, but you see it in the volume. So the volume sentiment indicates that move wasn't as strong in the down direction as the moves were in the up direction. Same thing here on this one, smaller selling volume candle. So this, and obviously we have the future here. It ended up, being a favorable trade if you wanted to scalp that. Just something to look at. So even though you're off of this trend line, if you look at the corresponding volume, it'll give you an idea of how strong people felt about that particular move, right? Point that out. So once we break this trend, so this trend line was broken right here. Now let's say that this particular candle put all the way down here, had a big fat tail, but then it came back up and closed above that trend line. Are we still in the trend, or are we out of the trend now? Well, that one's kind of because we did have a huge tail that came down out of the trend line. So what it would make me do, even if we close still within this trend line, it would make me watch it much closer for sure. Because since we broke that trend line, even though we didn't close there, we broke it, I would start getting a little more concerned in staying in the trade. Now, once we completely broke the trend line, this is what I wanted to point out, is I wanted to point out that once that trend is broken, like I said, they only last for a certain time. So once that trend is broken, then you just cancel these because they're no longer any good. You're having a Model T or whatever, it's no good anymore. So just get rid of them and then start your new trend, okay? Because that is over. So, and at that point, we kind of started a sideways trend. So, you could draw your little trend lines here, put your sideways trend. And I always make them perfectly even, but for purposes to be faster right now, I didn't make that one even. So when you stretch it out, it's not going to be even over here. But definitely when you draw your trend lines, make them even. So when that trend broke, then we kind of started in this new trend. And what did it do? It definitely broke the trend here. So almost immediately, you're going to end up having to draw more trend lines. And you would end up probably drawing one like this, something like this, right? So now you got a new trend. And look how it holds that trend line. Breaks it again. You're continuing to redraw your trend lines. I hope you guys can see how much easier it is to know when to spin and when to get out of a particular move on these trend lines, right? As long as we're staying within that trend line and volume is still showing us, yeah, we're still in buying mode here. We've got a lot more green volume bars that are larger than our selling or even pullback bars, then we're still in good shape. So you see how volume can be indicative as well and goes really well with your current trend. So then once you break that trend, this would be somewhere, everybody's trying to catch the top up here, but that's going to be really difficult to do because you have no idea. Okay, let's say you sold here. A lot of people, they'll buy their entire shares up front of what they're willing to commit to that particular trade. And then when it's time to sell, they'll sell all of them at the same time. I typically don't do that. I usually will, if the trade is risky, I'll scale in. If it's not risky, I'll go all in, not in my account, all in on what I was willing to commit on that particular trade. And then I'll scale out. And sometimes I end up scaling out too early, and by the time this thing blows up and goes up another $4, I only have 25% of my original commitment still in there. But hey, it's okay. Green's green. As long as you're making green, that's good. Nobody ever went broke taking profit. So, but anyway, I wanted to point that out, that once you draw these trend lines, man, it's so much easier to identify where this thing should be trading, right? Because keep in mind, we started this move, we only drew our trend line here. We didn't know all this other information, but it's still true, right? So draw those on there visually, it makes it much easier. Watch when I take them off. It's kind of hard to tell, you don't know where this is going to pull back, but when you have that trend line drawn, you have a pretty darn good idea of when it's going to do that. Okay, so went over that, and make sure and draw those bounces, like I talked about, like that, whatever that was, that 7, I guess it's this one, where we started drawing this bounce here. It really held, hey, where's this thing going to bounce? Well, last time it bounced here, so it broke it here, so you might even draw another one here, right? We had another bounce there. So that if you did have another pullback and it didn't bounce here, let's say it went down, so let's say it broke, right? So you're thinking, okay, well, the next bounce could be here, right? And why is that? Well, because that's where buyers came in over here. Maybe buyers will come in here again. So draw these on your chart. We'll go over this more in detail when we do support and resistance. I thought I would be able to incorporate volume and support and resistance on the same session, but there's just no way. There's too much to go over with volume. But there's just a little bit of it. We'll definitely go in deeper on that session, and that's a really good session to attend the live version if you can, because you can see how important they are. Look how this thing held this trend. Yeah, it went up and broke it here and came back down. And maybe we might have, drawn a different trend line here and here, but once it came back down and started kind of consolidating here on the bottom, we would have had a pretty similar trend that we would have drawn here that continued to kind of hold. We would have certainly drawn another one here, as time went on. So you're just constantly changing those, but they're very important because it can let you know off the bat where you can expect something to happen, and it just makes it easier to see. Let me go over and make sure I've covered everything that I wanted to, and we'll hit some questions. Oh, and once you do have, let's say, we talked about that cooling off period, when these things, the volume kind of tapers off, and then you're watching for it to come back, right? So once you're watching for that volume to come back, you're also wanting to see if it's coming back in a key area. Is volume coming back? I don't remember what this was PM high. So if volume is coming back, because now PM high, where in pre-market it was resistance, well, now it's kind of, support, right? So it may not be that strong of support, but it just gives you an idea of, if volume starts, if the price was here and it kind of slowly started ticking up, a lot of people say, hey, such and such worth watching only because it's ticking up, but it's barely ticking up. It's ticking up like, I don't know a good example, like right here, okay? It's just kind of barely ticking up. There's not really much volume. That's just some buyers coming in. Sure, it's worth keeping an eye on, but what you're watching for is some big volume to come in. That big volume does, after that cool-off period, once that big volume does come back in, look for it to come in at key support or resistance areas, because, well, again, that's another indication of something else that's agreeing that, hey, yeah, this thing's looking good because this was a pre-market high, or this was where the last bounce took place, or this was resistance and we just busted through it with corresponding volume. So the more indications you have that agree, the better, obviously. Okay, so let me go over my notes here. Looking for the volume bars, buys and sells, size comparisons to see sentiment. Talked about breakout traders, looking for different things, and that's why when it breaks a key support or a key resistance level, that's why a lot of times you'll see it shoot up, because a lot of these traders, they're looking for the same thing that we're looking for, and some of them have the same knowledge that we have. So they're looking for that. They're looking for VWAP breaks or bounces off of a support or bounce off of a trend line. So you're looking for buyers to come in at those key areas. Okay, let me make sure I covered everything, and we'll hit some questions here. Talked about this, but let me just point it out real quick. So I think we talked about the sentiment. So when you're having a decline in volume on a pullback, that a decline in the recent relative volume, right? Compare the recent volume to the pullback volume. If that pullback volume is much lower, then that indicates that there's less sellers than there were buyers. So very important to know. Again, I think I mentioned this, but just want to make sure that I did. Again, when you don't have a wick at the top of a green candle, that indicates strong sentiment in that direction. Same thing with no wick on the bottom of a red candle. It indicates strong sentiment in the downward direction. Let's see here. Everything. Okay, I think I covered everything that I wanted to cover. So let's hit some questions here. We have a question. The question is, how much volume is considered low, medium, and high volume? That's a good question, Groundhog. And so it's all relative volume, just what we talked about. So you may have one ticker that, it normally, let's just take news catalyst just out of the equation for just a moment. And let's just compare. Okay, I'll give you an example. So we looked at ATXI earlier. It had 84,000 volume on the entire day. This VTNR would have 84,000 volume in 2 seconds, right? So does that mean that if 84,000 volume pops into VTNR, that's huge volume? Well, no, it doesn't, because the volume needs to be relative to that particular time that you're looking at. So if VTNR got a spike of, let's say midday, let's say we were midday and we're at half the volume, we're at 40,000 shares traded for the day on that ATXI. So at 40,000 volume, and it gets a volume spike of 25,000, 1 minute volume candle, hey, that's something to look at. It's not a lot of volume, but it is relative to what's been going on with that stock for the day. So it's brewing, basically. So you're not necessarily looking for X amount of volume. Now, the only time I'm looking for X amount of volume is when I'm determining what time frame chart that I'm looking at. Then I will look at X amount of volume. If I'm trading a stock that's doing 15, 20, 30,000, 40,000 shares per 1 minute candle, I'm fine with that. On VTNR, and it's doing hundreds of thousands or even 100,000 shares per 1 minute candle, I'll probably switch to a 3 minute. If it's doing 500,000 shares per candle, I'm looking at maybe hopping to a 5 minute chart. Rarely do I go over a 5 minute chart unless I'm looking for support and resistance. I'll go on my 1, 3, or 5 minute chart. But that's a great question. The short version is you want to look at the volume relative to that particular ticker for that particular time frame. So, if let's say VTNR opens up on Tuesday and it's only trading with maybe 30,000 shares per candle, that's lately that's relatively pretty low volume. But if 30 minutes later during the day, it gets a volume candle of 95,000, you want to take a look at it. Even though it's low for what it did on Friday, it's still relatively high for what it did Tuesday morning. That makes sense? Okay, next question. Do you trade only those stocks which have momentum and supporting news? So no, I will do momentum trades. I don't like them as much as I do catalyst and news trades. My main strategy is catalyst and news trading because it's a safer strategy. Momentum stocks, momentum strategy, it is profitable, but it's riskier because you don't really have anything to base it off of. How do you know? Kind of when, let's say you have a price target news hit in the morning. Let's say the price is currently trading at $3 and it gets a price target of $6. Is it going to go to $6? Probably not. You might get a 50 cent or $1 pop out of that. But you kind of have an idea based on the catalyst as to where it's going to go. When you're trading momentum traders, you have no idea where it's going to go. If you had told me 3 days ago that BTNR was going to go to $8 just because they bought a refinery, I would say you're sniffing glue. There's no way. But hey, everybody wanted it to go there, so that's where it went. So it's just hard to gauge. So that's why I think they're riskier. But doesn't mean that I won't trade them. I sure will. What I am more comfortable with on momentum trades is I'm more comfortable with scalping, because and maybe in one of our sessions we'll go over scalping. It tends to be much safer. Okay. Next, do you usually trade between 9:30 a.m. Eastern and 11:30 a.m. Eastern when the volatility is pretty high? Yeah, sure. Like I said, I don't like to trade at the bell. I don't like to hold through the bell unless I'm very comfortable with the position that I have. If I, bought pre-market. But yeah, absolutely. I've said many times that good living can be made just trading from pre-market until about, I'll get my times mixed up, until about 11 a.m. or so, lunchtime Eastern, 11, 12, something like that. A lot of times you can just kind of quit for the day, because, we don't always have these all day runners like LEDS, VTNR, and, some of these other ones. So a lot of times when we don't have those, that's when I'll hop over and I'll start, trading futures, because there's liquidity in futures all day long. So yeah, that's when you're going to see the majority of your volume is going to be when things, and then, just a couple of 2 or 3 hours after that. And then typically, it's just, like VTNR LEDS was on Friday. Typically, you'll see volume kind of taper after that, and things flatten down. But yeah, those are great times to focus on, because that is where the volume is. But you always need to be looking for where the volume is. And that's why it's important, to look at these stocks, keep them on your watch list and have them in order of volume. That way you can see, what the volume leaders are for the day, and you can kind of focus on those stocks. And then you can dig into each one and see, do they have a catalyst, or is it just momentum, or is it just a pump and dump, or, whatever. But yeah, volume, very important there. Next question. In the VTNR example, you were going over where did you jump into the trade? So I don't remember. Let's see, I've got, I wrote it down here. I scalped it quite a bit. I scalped LEDS quite a bit. Like I said, I don't like momentum trades as much. And I don't like alerting them either, because they're risky. Let's see. On Friday, I didn't trade VTNR. I only scalped it. So just looking at my notes, I did trade LEDS, but so when I'm scalping, that's a whole nother session, and it'll take a full hour going over that at least, and maybe even a couple of 2 or 3 sessions. So I won't get too much into scalping right now, but basically all you're doing is you're looking for volume, and then your corresponding candle. Basically looking for entry alerts where you pretty darn sure the price is going to push up at least a little bit, and not really worried at that very second that there's going to be a big fat pullback, because you're just going to scalp maybe 20, 30 cents, whatever it is. Sometimes I scalp 10 cents. You hear these people say, oh, these dang penny scalpers. Well, hey, that's fine. That guy's not mailing me a check every month to help put food on my table. I'll take the pennies. I'll take the 10 cents or 20 cents, because my objective is to, this is what I do for a living. My objective is to end the day with a nice green figure. So don't worry about what other people say. You need to make money for yourself. Okay, next question got answered. Okay, good. Next question. How does the float tie into this? Okay, so great question. So what we want to look for, our ideal scenario when we're trading is to be trading a stock that has some kind of catalyst, okay, that's fresh, not something that happened 4 days ago. A fresh catalyst that's a low float, that has a decent amount of short interest percentage. And why do we want that? So we want the catalyst because that lets us know that, hey, this thing's probably going to move, probably going to get some volume and have some price action. We want a low float because when you have a low float, there's a smaller amount of shares that are available to buy, right? So when there's a smaller amount of shares available to buy and a catalyst is making people buy a bunch of shares, what does that do? Well, that makes the demand higher really than the supply. So the price tends to shoot up much faster when, supply is low, demand is large, right? So whenever, everybody's traveling during the summer and one of our refineries goes down and it can't pump out as much gas, what happens to the price of gas? It goes up because the demand is much higher than the supply. Same thing with a low float stock. So that's why a lot of people will focus on these low floaters. And this is just me personally. Other people may give you other figures, but I consider a low stock 20 million shares or less. Like short percentage, at least 15%. 10% can be okay too. It just depends on if it's how many shares are in the float and blah blah blah. But 15-20% shorted is good. And why do we like shorted stocks? Well, because if you have a lot of shorts that are in a stock, once that stock price, let's say it gets a catalyst, and they're enough to hold and not cover when that catalyst news hits, once that price starts shooting up, guess what? They're in the red. And just like when you're in the red, you're looking at, oh crap, I better get out of this. So are they. So, once they're in the red, they're going to start covering. And what do they have to do to cover? They have to buy those shares back. So they're buying shares just like we are. And what does buying shares do? Especially in a low float stock? It makes the price jump. So that's our perfect scenario. Catalyst, fresh catalyst, low floater with relatively, higher short interest. Your question. Next question is, I think you answered my question. That's good. It seems like sometimes, this is another question, it seems like sometimes the volume goes up for only one bar, then goes back down. You're exactly right, and I'm glad you said that, Skipperdoodle, because there was one scenario, I think it was right here, that I wanted to point that out. Let me read the rest of your question here. How many large volume bars in a row do you like to see before you jump in a trade? Great question. And that's really a tough one to answer. Here's a good example of that, right? So we have relatively lower volume here, okay? Then we have this larger volume candle here, 525,000 on 1 minute chart. Then we have a huge here, 1.2 million. So this was very tricky. It ended up being okay, since we know the future here. It ended up being fine. You would have, as long as your loss wasn't any 92 or higher, you would have been fine staying in the trade. But it would have been nerve-wracking for sure. So there's not really necessarily, I don't always say, okay, after 3 big volume bars, I'm hopping in. I don't, it depends on what all other indicators are there. Is this a key support level, or was it a key resistance level that we just broke? Okay, that will that will be another indication for me. I don't have anything drawn there. Let me look back here and see if that was, where were we at here? 582. Yeah, I don't know. Maybe, I might have had this drawn here in this area from some of these bounces. There's some bounces right here, as you can see. But it looks like 560s area, 570. Point out that doji as well. That's why I put these arrows there. So yeah, there's it's a key support level, and I had other indications that I would have felt better about the trade. That doesn't mean that if I saw this, that I would have hopped in this trade. I very well may have, because we had huge volume relative to what's been going on just previously. And at the top of this candle here, as you can see, we had no wick once again. So very strong buyer sentiment here. and this candle continued on up. But yeah, you can definitely get fake outs. You can get, just one big volume spike and then nothing happens. This is why it's always good and safer. Yeah, you might miss some trades, or you might miss maybe getting in at the bottom of that particular trade. But it's safer if you wait for a little bit of confirmation. So let's say we did, let's say we kind of FOMO'd in up here, at the very top, right? And we got in at 616. Well, it ended up pulling back to its lowest of 592. Well, I don't know about you guys. I wouldn't have gotten too nervous only being down, however many cents that is. But some traders might, right? So had I stayed in this trade, it ended up being favorable over the long term, but I would have been a little bit nervous. I would have been feeling a little bit better about these when this volume came in, and then if I was still in the trade, I would have done one of those whew here once this volume came in and we started seeing the up move. But that's a great question. Yeah, you can certainly get faked out, and it does happen where you'll have just one humongous volume spike and then nothing afterwards. And that's why trading's risky, So, and that's also why we have stop losses. So let's say we did have our stop loss at 595, and so we got stopped out here. Well, we didn't lose big, right? Let's say we got in here on this next big volume bar, or maybe even here. Well, a much bigger move and made a lot more money than we lost on this smaller move. So we lose small and we win big. Most times you can, let's say, 5 alerts are given in a day and you stop out on 3 of them, and 2 of them went, ran some. You should make a lot more money on those 2 trades than you lost on those 3. Next question. I guess that's it. So is that all of the questions? Had a pretty good group today. I also believe that this session is being recorded as well. So to have access to it, there's more information in this one than yesterday. Some other things to kind of touch on, and also, we had different questions and things like that. So, it might not be bad, even though you attended this one, you may want to listen to the other one. Next, no, that same question. Okay, well, we're going to call it then. This thing ran an hour and 38 minutes. So I hope everybody got something out of it. And I hope, let me go over one other thing. I want to go over that doji real quick. Take just 1 minute here. So this is a nice doji candle here. And what I wanted to point out is that, again, you have some indecision. So you have a little bit of very obviously short-term downtrend here, from there to there, right? And then you have some market indecision. And what does market indecision tell us? What does a doji tell us? It tells us that be looking for price to go possibly in the opposite direction. Because, this move pushed down here, what's going on right now. To point that doji out. So thanks, guys, for joining the session, and I hope everybody has a wonderful, fun-filled Memorial Day weekend. And I look forward to seeing you guys on Tuesday, and hope we have a fabulous Tuesday.